Hello everyone, this is Mohammed Akif with Akif CPA, and today I'm here to discuss client stories. So this is something interesting that we have started. We'll be discussing many different topics through our clients. We want to discuss their situation, what are their issues, solutions to those issues, and then how can we get to those solutions. So this is very interesting. I wanted to do this for a long time, and then I've been trying to get this to it, but for somehow it just being delayed. So technically we'll be sharing queries or initial inquiry from our clients, and then when they send us information, what exactly is happening, right? What are their problems, and then what kind of issues we are dealing with, and then how do we get to the solutions, and then how do we get to them. So we'll be discussing their situation, some of it in detail, so whatever we have, and then I'll be listing down the issues, I'll be listing down the solutions, and then what can we do. So without any ado, let's get started. So I'm going to sharing my screen. I'll try to write as much as possible. Sometimes it's tough. So I'll be talking about certain points. I'll be talking about certain things. So this series is client stories for cross-border, and this is the #1 part. And then I've done multiple other series. We'll be discussing many different topics. So client series, cross-border, #1, and then let's get started. Okay, so let me share my screen with you guys. Oh, I don't like this. This happens quite a bit. PDF document just fails to open. Okay. Cancel. Enter again. All right, here we go. Here we go. So this is a cross-border Canadian-US client story. So a client has reached out to us, and then we'll be discussing their issues. So of course, a lot of things are redacted. This is to protect the sensitive information and their identity. So this is just to discuss the scenario. So let's get started. So a little bit about the situation that they will be going through. Is moving from United States to United States from Canada, in probably this year, probably next year. So they will be leaving Canada. This is a situation in 2024, I believe, and then they'll be. This was emailed early in 2024. Then they were leaving in September from Canada. They're planning to live in the United States for a couple of years. They're planning to keep their bank statements, credit cards, of course, the RRSP, driver's license, passport. The prospect client was not married, no dependents. They do have OHIP, and then of course, once they become non-resident, the OHIP will be canceled. So this individual is moving from Canada to the United States. Will be living in the United States for a couple of years. Has certain issues. Has certain accounts. Has retirement accounts, investment accounts, and we'll be discussing the questions. So here we go. So let's say question #1. Question number is whether or not should I close my TFSA? This person has less than 20,000. So what should we be doing with the TFSA? Next question is how would you determine your residency? So what are things that we need to look at to see if you're still tied to Canada or not? That's #2. All right, so let me pull up my pen. So that's #1, and that's #2, and #3 is when will I have to file my final return? So let's get this going. So let's talk about certain what is the #1 issue. The #1 issue that we have over here is, of course, the retirement accounts or the investment accounts, right? So this and that includes the TFSA. That's #1. #1 issue is TFSA. #2 issue is so residency. Where are you based for tax purposes, right? That's #2 issue. And then #3 is the filing. That's #3, tax filings. So let's talk about the TFSA. So as a Canadian, when you move to the United States, TFSA uh, it really TFSA is not considered the same way as it would consider on the Canadian side. So on the Canadian side, any contributions you make, which are of course after tax, the growth in that account on those contributions are also tax free when you withdraw. So contributions are after tax. The growth on the contributions, that means interest, dividends, the value of the investments, are also non-taxable. So these are all tax free. This is the tax free account on the Canadian side. Is it true on the US side? No. What happens? So we don't have the same status on the US side for the TFSA as you would on the Canadian side. So that's number one issue. So number two, residency. I mean, so where are you technically residing for tax purposes? So for Canadian side, we do have primary and secondary rules. We have primary ties, which includes your home, your family, your job, economics, and then we have secondary ties that includes your investments. But there's a whole list of things that we have on the primary side and secondary side. So when you are looking at your residency on the Canadian side, you're also looking at certain other things, again, which includes in primary ties, and then the second part is the secondary ties. So a combination of stuff gives you your answer. So everybody's going to be different. Everybody's situation is going to be different. Not necessarily one set of rules will apply to everyone, right? So your situation might be unique. If you're unsure, of course, there are certain things that you can do, and then you can get surety on your situation. And then there's certain things that you can do before you leave, and then after you leave. And number three, once you do determine your residency, how do you file, right? I mean, what forms you need to get to on the Canadian side and what forms on the US side. So the year that you leave Canada and then you become a resident in the United States is the most important year, right? I mean, because it is the year that you're going to have filings on both sides. Let's say, for example, you're leaving Canada for tax purposes too, and you are becoming a non-resident. So that year is a complicated year. That year involves filing on the Canadian side and filing on the US side. So make sure that you find somebody who's competent, who understands cross borders. I've seen individuals, like Canadians, find somebody on, they find somebody on the Canadian side, they find somebody on the US side to do your stuff. And then next thing you know, they're in trouble because a lot of the US accountants or tax preparers or CPAs don't understand a lot of the foreign reporting requirements for Canadians. And then this is also true for Canadian accountants, tax professionals, chartered accountants over there. They don't understand how things will affect the US side. So make sure you find somebody who is good at cross-border taxations. Is a person who has dealt with Canadians or the US who are coming and going, and then know what they're doing, right? Because the first year return really determines your situation going forward on the US side, and then how things will end on the Canadian side. So make sure you find somebody good. So the number three is filing. So these are the issues, and then so let's talk about the solutions here. So the solutions for number one. So number one, the TFSA, and this is the solution. If you're unsure about TFSA, close it. I would recommend closing TFSA before moving to the United States. Yes, every situation is going to be different. If you can, I would close it before I move to the United States. This is to simplify reporting on the US side. This is to simplify your tax handling. And then you need to make your tax filings easier, right? You don't want things to be continuing, because this is what happens. Depending on where you go in the US, who is doing your tax preparation, in some firms, the TFSA might be considered a trust. So they will file Form 3520 and 3520A. And then some tax firms will not consider TFSA your trust. So they will do some other types of reporting. So in order to reduce that ambiguity, or to clear this out, or to make sure that you're out of the gray area and this is black and white for you, if I had the chance, I had the opportunity, and if I could, and it will make sense for me, as a taxpayer, then I would close TFS down. This is one of the biggest areas of ambiguity. There's a lot of gray area. In order for us to do file for TFSAs, we have to look at other accounts, how the US treats them. So the TFSA is in a gray area. Some firms will say this is a trust, and some firm will say this is not a trust. So we are not sure again, everyone is going to be different. This is not one size answer for or fit for everybody. Everybody's going to have a different situation. But if I had the opportunity or if I had the chance, I would close it. That'll be my number one recommendation. Again, seek out a tax professional before you make that decision, right? Talk to somebody who knows cross-border, talk to your financial advisor, and make sure you're making the right decision. So closing TFSA, that will be number one solution if you had the opportunity or the chance, and you could. Number two, residency. If you're unsure, file Form NR73. Really, if you're unsure about your residency, you don't know what is happening, there's a form out there by the CRA. Fill it out, send it in, and let the IRS or let the CRA make a determination, and then go from there. If you're sure, you look at the primary ties, you look at the secondary ties, or you have talked to a professional, then file a simple return. File a simple return. And when you leave, there's a departure return. Of course, we have certain other rules when it comes to departure returns. File those T1 departure returns and let the CRA know that you have left Canada for tax purposes. So that's number two. So NR73 or T1, right? That's your. And number three, filing, right? So once you have found out that you are leaving for tax purposes, again, we have certain rules when it comes to departure tax. Your certain assets will be taxable, certain assets will not be taxable on the Canadian side. What happens on the US side, that's also matters because we have substantial presence test. On the US side, are you a resident, non-resident, how many days you have spent on the US side? So that's a big deal. Again, file somebody, a good tax professional, a cross-border tax professional. All right, this is what I will advise on to help you, because without this, it is hard to get things done. Even if you are a DIY person, get somebody else to do the first year, understand what they're doing, look at the returns, see if you can do it, then take them on the next year. But do not try. I will not recommend trying it the first year. The US has a lot more foreign reporting requirements with a lot more penalties. It's not the same as the Canadian side, and then has more reporting than you can think of. So if you're not a tax professional, I will recommend getting somebody for the first year, making sure you understand your filing requirements. And then once you understood, then maybe you can take on the second year. I would always do this. I will always recommend finding somebody, a tax professional who's a cross-border accountant, who understand Canadian rules, who understand US rules, and that can help you. So again, if you have any email, any questions, any inquiries, shoot us an email at info@keepcpa.com. We're here to help you. Again, going through the client scenarios, discussing the issues, discussing the solutions, and how to get those solutions. Info@keepcpa.com, and then we'll gladly help you. Thank you very much.